All right, welcome into Market Day Report. Good morning. Happy Thursday morning to you. I'm Scott Shelley, otherwise known as the Cow Guy. I think the jacket gives that away. I'm ready to get going here. Let's take a look and see what happened overnight. And actually, it's going to make my job sitting here a little bit better today because we had some green on the screen finally. Yep, we are allowed to go higher at some point in time. Let's take a look at corn. What did that do overnight? It was up. I'll tell you that right now. We'll take that initial 6.5 cents in SEP. 402 and a quarter is last. We got above that $4 level. And look at these. It's up 4.5 cents to 411 and 3/4. So a pretty good going there. That's not bad. We'll go over to the beans. There too. They were also higher by a dime in August. 11.23 and a quarter is last there. And if we go out to the Novi new crop, look at that. 10.74 and a half. We were up 7.5 cents. So there you go. That's beans. How about Chicago wheat? You want to know what's going on there? So do I. They were up big time overnight. 14 cents higher in that SEP. 5.75 and a half is last. And we have a D sport up 13 and a quarter cents right behind it too. 5.98 and a quarter, making a move on that $6 line. We did get above it earlier. 6.01 even is the high there. That's Chicago wheat. Moving over to the Kansas City hard red. Let's take a look and see what that has in store for us. And again, some more double-digit gains. 15 and a quarter cents better in that SEP market to 5.80 and 3/4. You go out to the March, that's up 14 and 3/4 cents to 6.13 and 3/4. All right, so we got out of the fives there as well. All right, not bad. That's hard red in Kansas City. Let's take a look and see what spring wheat's got for us in Minneapolis. Used to live in Minneapolis for a little while. September's up 11 and 3/4 cents to 6.22 and 3/4. Moving on out to March, 11 and a quarter cents better there to 6.56 and a half. And then finally, we're going to do the cotton, and we're going to get to our guest analyst who's been so patiently waiting in the wings. Cotton, go right to the D. That's the new crop. 43 points better, 71.36 is last there. All right, let's bring him in. He's got something to say, I'm sure. Mr. Brian Hoops, he's the president of Midwest Market Solutions down in Springfield, I guess it is. I'm not in Chicago anymore. Springfield, Missouri. All right, Brian, what's top of mind here this morning? It's nice to see a little green on the screen. After that, what are your thoughts?
Yeah, good morning. I'm glad we can go higher. It feels a lot better when you get just a small bounce, and that may be all this proves to be is just a small kind of a technical short covering bounce. WASD report out tomorrow. It doesn't look real bullish to me. It looks like it could be a little negative, but we are getting some short covering because we've been beat up so much. And export sales that were out this morning really not going to help us out much. The old crop corn were 21.2 million bushels, new crop at about 4.6, soybeans at 7.6 for the old crop, and about the same amount for new. And then the wheat came in at 8.8 million bushels. So pretty much routine numbers, nothing that we're really going to look at and trade off of. The ConAb numbers that came out this morning, the soybeans were virtually unchanged from last month, but they did increase corn production by 1.7 million tons. And, that adds more production to their balance sheets. They're going to undercut us as far as exports. And for us here, it means longer term, slower export pace going into the rest of the summer. So you talked with producers this morning who may be sitting on some old crop already. We talked about basis is real tight. In Northwest Iowa, it's still 440 for cash corn. Not what it was at one point in time, but it's still fairly attractive while that basis is tight. There's some marketing opportunities. So, the window's slowly closing on this marketing season, and you just don't have many opportunities. But if you have a tight basis, there's an opportunity to try and take advantage of.
Yeah, I guess why some guys would wait, but I still, to me, look what waiting's got you. I know you always feel like when you finally do, puke, it's going to be on the lows, right? But at the same time, there's going to be a lot of other people puking with you, so maybe you puke first, you get a better price, right? You know what I mean?
I know what you mean, and and that is the fear that you're going to sell on the low, and market's going to take off and rally. Just buy some call options, buy September calls. They're not that expensive. You're not buying a lot of time. It gives you some upside in case we do rally in the last half of July and into August. But as Tim said in his weather forecast, it gets hot through the weekend. Next week it cools off. Through the end of July, the 6 to 10 day forecast talks above normal precip and maybe above normal heat. So nothing there that's going to suggest sharply higher prices into the end of July.
Yeah, it's maybe geopolitical. Maybe, look, you'd think we'd get more sales done at these cheaper prices too. I'm a little disappointed about our exports. Real quick, what do you got to say about that?
Absolutely. And one thing this morning that could help our exports in the future is that lower dollar. The CPI numbers that came out this morning, less than expected, sent the dollar sharply lower. We're about 85 points or so lower right
Uh-huh.
now. You would think that would help out our exports down the road. But then again, you have Brazil that's going to undercut us as far as prices and make sure their crop gets sold.
All right, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more livestock, see what they did yesterday with Brian Hoops. We'll be right back after this. All right, welcome back to Market Day Report. Let's talk about some livestock, right? I wear this jacket all day. We got to get to that. We were doing more dairy than cattle, but still, there was a lot of cows around. I'll tell you that right now. Let's take a look and see what live cattle did yesterday. And they were just slightly easier in the front. August down a dime, 182.25 there. October live cattle down a dime as well to 183.20. The worst it got was 65 cents lower in the April, all the way out the deferreds to 188.37. Steady, a little bit easier. If would have looked at that overnight, that's all. Well, we didn't trade overnight, but if you looked at it yesterday, that's what you would have said. This was a little bit worse, though. Feeder cattle, August off $1.37 to 254.35, and if you go out the deferreds to say November, that's off $2.47 to 254.65. We'll see what happens here today, and then lastly, we'll do lean hogs. We'll get back to our guest analyst. They took it on the chin yesterday. August got hurt, $3.72 lower. I think that was a tick off the limit lower on the day. 84.67 was last. We got about 60 seconds. Let's bring him back in. Brian Hoops, Midwest Market Solutions. Brian, what do you think about this morning's opening?
Well, the beef sales this morning that came out were a market near low, so that's not going to help out our cattle outlook. We've been talking about maybe demand starting to slow after the 4th of July. I think this is more evidence of that. The cutout values are trending lower, so you have poor sales. Cutouts are trading lower. Cash traded lower yesterday, a couple dollars lower on a dress basis in the north. And just kind of looks like this cattle market is going to struggle at these higher price levels. So again, we've been talking about hedging, doing something there to lock in some opportunities or good profits on these cattle. I think that's still the way to go. The evidence is pointing towards that. A hog market, the sales this morning down considerably from last week's market year high, back in the range of where we've seen things, over the last several weeks. So that hog market's really been beat up. This export sales is probably not going to help us out much.
Yeah, I mean, if you go out to the deferreds there, we go from the 80s to the 60s pretty quick.
We do. It's pretty ugly out there, and I've seen worse prices than that. But hopefully, this is building in some sort of a summer low for the hog market.
All right, that's great stuff as usual. Thank you very much, Brian. Brian Hoops,
Sure.
He's the president of Midwest Market Solution, coming to us from Springfield, Missouri, and